resume recording. Okay, and then we've got the chat room here, and that's wonderful, wonderful, wonderful. So I want to bring your attention to this week. This is really, really interesting, and I was just thinking about payments, and I just want to, I think I've got a picture here that I need to see, but my computer, wait a minute, let me bring it up again. Where is it? Oh, here we are. All right, I'm going to share my screen, and then you can, let's get some background about what's going on here. Share screen. Remember this in week 2? Do you remember week 2? Like, remember you played this game in week 2? Yes or no? Right?
Yeah.
Yeah, that was cool. Yeah. All right. And then, so that was last year's game in 2020, Fintech. And then based on, like, this is, you know, there's some margin for error here. So let's not just say that this is factual as we want, but we get some ideas of the trends. So this week we're looking at payments, right? No, deposits and lending. Just trick question. So deposits and lending is the, how do I know if it's deposits and lending? Because we have the wheel of disruption. Yeah, we're in deposits and lending. Okay, so if you look at deposits and lending, that was the orange 2-3 years ago, and very big in all the countries. But more recently, not so much in Singapore, less in Malaysia, Indonesia, okay, Philippines, it's growing, and India, you know, sort of India and China, it's cut back. And maybe we could speculate why it has cut back because of maybe some of the things we talk about today. All right, like it's not perfect. The deposits and lending model at the P2P is not perfect. All right, it's not the perfect solution to getting rid of the bank and things like that. And that's what we're going to look at with that case today. And that may be one reason why, like in Malaysia, it made up 17% of new funding, but then more recently, if you notice across all the countries, that payments seem to be getting a larger share of the VC funding, the green, and deposits and lending getting a smaller share. So, you know, these things change from time to time as startups try new things, then they run into problems, and some of those problems we're going to talk about today. Okay, that's a Kahoot. You look at that later. I will not distract you with that. All right, so let's have a look at, we have a funding societies is our challenge that we're going to look at. And have you had a chance to have a quick look at, okay, let me help you. How many of you are aware of funding societies?
Before doing the tutorial, I have never heard of it.
Yeah. Oh, now I think they're still existing, but the question is, do you want to be part of it? Like, wow. All right. So let's quickly run through this case. All right. So actually, all of us today, we could go, I think we can go, we enjoy funding societies. We can put in 100 ringgit, 1,000 ringgit, I think, and that will contribute towards a particular investment offering that they have, right? So funding societies is kind of like it's more of like a lending platform, right? whereas you put money in, you choose whether you want a high risk, low risk, and it could, and I'm not sure, what is the, here's a question for you to quickly just get your brain working. What is the minimum amount you can invest in funding societies? So let's see how fast you are, if you can find that out on the internet now. What is the minimum amount you can invest in funding societies?
100 ringgit.
How much?
100.
100 ringgit, is that all? That is amazing. Wow. Okay. And so I've got it up here. You're right. Start investing, right? And then invest now. Oh, invest from just Singapore dollars, $20. So what are you talking about? 100 ringgit. Wow. So you put 100 ringgit in, and then you can, like, my recommendation, and this is not financial advice, is you got to be prepared to lose that money. Like, that's speculative. So just let's just put that on the record, all right? But isn't that interesting that here's a platform that you don't need to put much money in, but then when tens of thousands of people put in little bits of money, then it's funding societies is able to help businesses that banks would say no to, right? And like, that's the reason why these platforms have grown. It hasn't just grown because tens of thousands of people want to invest somewhere. It's also grown because banks say no to tens of thousands of businesses. You with me here? Like, there's a demand for a platform to get easier loans from. You know, if banks said yes, then why would you go to funding societies? Maybe because you don't have to pay as much interest, and maybe because you really don't have a real business. Then, okay, so funding societies, this type of platform can create as many problems as it provides a solution. All right. So let's have a look at this case. So let's have a look at note 1 and the first question. Okay. In this case, there was a large default. There was one of the note issuers. A note issuers is basically a client that borrowed money from funding societies. So borrowed, but basically issued a note. By issuing a note, therefore, that's not a guarantee to pay your money back. So it's different from a loan from a bank. They're on the brink of defaulting by 3.5 million in debt. Wow. Wow, that is a lot, nearly $1 million US. Okay, it could be the largest default in the P2P financing industry. Okay, so the media inquired about what was going on, and funding society said that, well, we're not going to reveal the note issuer's identity. And the reason is that it may jeopardize recovery efforts, but also it's, you know, it could be good or bad. So the big question I have for you, I want you to think about this. All right. You've got, can you all go, have you all been to the Funding Society's website? Is this the first time? Can you all open it now? Okay. I just want you to see what we're talking about here. And I think, what is P2P investment? Okay. So investment returns at 7.82%. Wow. So I could put in 100 and then choose, okay, maybe I want 18% investment, right? Invoice financing. You know what that is, isn't it? That means you're financing on the basis of businesses that have debtors, right, based on the invoices that they've given out. All right. And as you know, in business, not all debtors pay back. So this is just like factoring. Revolving credit investment, wow, up to 18% short term. So how many of you would think about investing in the high interest rate ones? What do you think about that, Melvin?
I think yes, because high interest rates, I think it's high returns, right?
Well, risk and return, right?
Yeah.
Anyone else? So we can all see a few products here. There's 6 different types here. We could go into a property-backed one. Maybe the property-backed ones are good. Maybe I cannot access this until I log in and sign up, but we can learn more. So these are all the questions that they're asking, okay? Then there's an auto invest algorithm. Wow, this is a bit like robo advising that we're going to cover next week. But for now, Funding Society is one of the main platforms in Malaysia. Well, basically now in Singapore now, and with over 1.7 billion Singapore dollars in business financing funded regionally to date. Funding Societies is the largest P2P investment platform in the region. Wow, interesting. Okay, so here's the first question. We have this borrower defaulting, and so therefore the question is, and then they ask, well, you know, can you reveal the identity of the borrower? And Funding Society says, sorry, no, we're not going to do that. So why would investors want to know the identity of the borrower?
So they are better poised and know what's going on, and they can make better, well-informed decision.
You mean, so for example, if we were to put something into a property, it would be nice to know the borrower, right? Because then we can maybe improve our judgment of that investment if you know of the borrower, if they have a reputation, right?
Yeah.
What else could you do if you know the borrower? If you know the borrower and then they get into trouble, what else could you do as an investor?
You could pull out from the investment.
Well, you've already lost your money, so pulling out or losing your money, no difference.
Or you
right?
can like prevent investing into the same borrower.
Oh, again, okay, if you know their reputation. Okay, all right, that's reasonable. That's a good question, good answer. But what else could you do? What else, like this note issuer is on the brink of defaulting 3.5 million debt. Why would you want to know the name of this note issuer?
So that we can contact them directly.
Right. And then?
And then we can like negotiate the alternative repayment method with them directly, because now currently we need to communicate with them through the funding society, that maybe will cause some misunderstanding issue.
Yeah, like you as the lender going directly to this borrower, bypassing the middleman, that platform, or maybe instigating legal action. Now, if you know the identity of the borrower, then you can then instigate legal action, right? Or you can get your friendly thugs in the neighborhood to go and pay the borrower a visit, right? To soften up the borrower, you know what I mean? you know, I mean, physically, or, you know, threaten the borrower. You could do bad things to the borrower that is not normal business practice, if you know what I mean. Okay, so I want you to think, if you're funding societies, is it important that the borrower's identity is not known? Like you just said, there's positives and there's some negatives. So who agrees that it's important to keep the identity of the borrower anonymous? Hands up. Who thinks that they should reveal the identity of the borrower? Let's do this again. Okay. Who thinks that the borrower should be anonymous and not be revealed to the investors? Hands up or not? Okay, so got the hands. All right. But actually, you got video on you and put your hand up like that, right? All right, it's okay. All right, sorry, just have fun. All right, we've got our friend with us today, so make sure let's not get too serious. All right, with who okay, who thinks that they should reveal the identity of the borrower for the investors to know? Okay, and okay, Jiao, Sinji, can you give me your thoughts on why we should reveal the identity of the borrower? What do you think?
I think the investor needs to know the identity of borrower because like they borrow the money to them, right? And you need to know identity, and if any default happens, then the investor can go to the borrower.
Yeah. If the worst happens, then they could contact a borrower, right?
Yeah.
And threaten them to get their money back or something, or to make out another arrangement.
Yeah, can like some legal action to them.
Yeah, or take some alternative action of what funding society.
Yeah.
Okay, so that's one side. And then the other side, we shouldn't reveal the identity of the borrower. Who would like to give the other side? Janita, would you like to say something? Why shouldn't we reveal the identity of the borrower?
Well, I think, like you just said, there might be some investors who would reach out to them personally, but maybe in an unethical manner.
Okay.
So just to protect their identity. I mean, not protect their identity, but just, I mean, a lot of people would be going up to them for money. So.
Okay. All right. And I want you to think about this. Like, is this new? Like this idea of protecting identity? Like when that's the reason why, you know, banks came into existence a long time ago, you know, centuries ago. What I mean is that the bank will take all your money and they'll guarantee to hold it for you, and then they'll on loan it to businesses, right? But when those businesses default, right, does the bank default on paying your money back? Yes or no?
Not really.
If you deposit your money with a bank, it's a bank deposit, it's guaranteed by the government, and you're getting 0.5% interest per year. And then the bank takes that money, they lend it to a business, and the business defaults. Does the bank come back to you and say, oh, sorry, you can't get your money back? All right, so the bank separates the risk of their promise to you from the risk of the business's promise to pay back their loan. All right, so you got separation of that risk. Whereas what's happening now with this fintech and the technology platform, like funding societies, it's kind of narrowing that gap, like between the promise that funding societies will protect your investment, which they're not making you a promise, right? They're trying, that promise is in trying to give you as much information as possible, but they're still keeping that gap by saying, well, sorry, you cannot know who is taking your money. However, if that person or company that takes your money defaults, oh, I'm sorry, but we won't be able to pay you back either. Isn't that interesting? You with me here? Like, we can understand banks. I give my money to the bank. I don't say to the bank, oh, can you tell me all the people you're going to lend this money to? And the bank said, no, don't worry about that. In return, your money is in this deposit savings account. We guarantee that you will get all your money back, and we'll guarantee 0.5% interest a year, and say, okay, I don't care who you give the money to, because I know I'm going to get my money back. You hear that? You get the idea of that? You're happy to give up the anonymity of where the money's going, because you got that guarantee that money will come back. But here with funding societies, you put the money in for a particular type bond, right? And there's no guarantee you'll get your money back. But at the same time, oh, sorry, we can't tell you who this money is going to. Like, isn't that funny, right? See the difference? Like, it's double jeopardy for you. Like, it's like you give something, but you're not getting anything in return. With the bank, you're happy to give up the anonymity of where the money goes. In return, you get that promise you'll get your money back. But here, you're giving up anonymity where the money goes, but there's no promise you'll get your money back. Like, isn't it? That's just, I think this is, when I was studying this, I'm just thinking, this is so funny. It's so funny that a platform like that just grows. Like, look how successful they are. It just grows. And on the basis that their policy is that we will never reveal the identity of the people that take the money. So I want you to be curious about that. Think about, wow, something like this could never have occurred 1 or 2 decades ago, because people wouldn't have trusted putting money into something like this. But now, wow, like billions of dollars raised and then on loaned to anonymous people, and you don't know if you're going to get your money back. All right, let's get on. I'm talking too much. You should be participating. I just wanted you to think of, that's something to be curious about. I find that very, very interesting. Okay, number 2, why would disclosing further information jeopardize recovery efforts? So funding society says, well, sorry, we're not going to disclose this business that may default because it will jeopardize our recovery efforts. So Karen, what do you think?
I think that it may or may not jeopardize the recovery effort depending on the company situation. Some further voluntary disclosure of the borrowers might mislead the lenders, because they might tend to be biased, because they might only disclose part of the positive aspects of the business. If borrower disclose further credible information, it might actually positively help the investor to trust in their lending decision, and possibly it will cause the success of the funding. So the expression towards the repayment ability might give confidence to the lender about their lending decision and also might solve the information asymmetry problem. Yeah, that's
Oh, very, very good. And can we just take one step further? And I may have misunderstood the question, but why won't funding societies, they also don't want to disclose information about that borrower to the investing public. Why would they say that we don't want to disclose that information to the investors because it may jeopardize recovery efforts? You know, they don't want to tell the newspaper, they don't want to tell the media, they don't want to tell the investors, they don't want to make it public. Why would that jeopardize recovery efforts, do you think? Anyone? Oh, yeah, Karen, yes.
Oh, I think that because the borrower might face actually social punishment sometimes, because if they already like cannot pay or something, and then they will have a bad reputation, so it might be hard for them to commence business in the future anymore.
Then that would make it even harder. Actually, it may force them to go faster into default, because now people find out that they are on the brink of default, and then other people that were going to do business with them stop doing business with them, and then that makes them fail even faster. So yeah, you got a big problem there. All right, so that's good. All right, let's and well done, Karen. Appreciate your thoughts on that. Let's have a look at note 3. Many of funding societies' employees are also investors on the platform. So this is, appreciate every one of you to participate. Do you agree that allowing funding society employees to invest in the notes? And is there a conflict of interest or an advantage of doing so? Who would like to take part of that? Who agrees, by the way? Hands up. Do you agree that the employees should be allowed to invest, or you disagree? Who agrees? No one? Okay, who disagrees? Anyone disagree? Okay, some of you disagree. Anyone else? Walshan, Binshang, Nancy. Hi, Nancy. Hi, Nancy from China. Yes. Anyone else disagree? Okay, so what's the argument? Could someone give me an argument for? At the moment, employees are allowed to invest. Why do you think they are allowed to invest? What is the benefit? Nancy.
Hello, Professor.
Hi, welcome.
You asked me why would I invest the P2P, is it?
No. Funding societies, they have their own employees. Apparently, I think there's 50. How many are there? How many employees do they have? Let's have a look. It says here they have 150 employees. Okay, so they're allowed to invest in their own investments. So why do you think they allow that? Nancy, why do you think they allow that?
P2P investment.
Yeah. Why do you think they allow the employees to invest in their own product?
Okay, I think it's investment, so P2P pro fund can work well if I understand the risks you are taking with the the approach use P2P investment.
Okay. All right. Let's
I type in the everyone can see my answer.
okay. Now let's someone's in the chat room. Who is that? Have a look. Oh, Nancy, you've put something in there, is it?
Yes.
Okay, fine. Okay, so that I think that's nice, really good. Can someone tell me why the employees should not be allowed to invest? Melvin?
I think because the employees have more information on the platform, which they might have taken the good ones while they leave the bad ones to the public.
Oh, so they have so they may have access to inside information.
Yeah.
Or they actually might know the businesses that have set up these notes, investment notes, right? Because they're employees, they may be privy to private information.
Yeah, I think it's conflict of interest.
Yeah, actually, I never thought of that. That's inside information, which is frowned upon in the public stock market. Can't have that. Oh, no. Okay, very good point, Melvin. Anyone else? Bok Yong, Eason, any other further comments to that? Inside information. What else? The other thing is that also there's not enough information of how many employees are investing in the notes. Okay. What notes they invested in are and what amount they invest in. I guess I guess that's related to what you just said, Melvin, that it's inside information. That's the big problem. The argument for is that anyone else like to add an argument for? Give everyone an opportunity. Yeah, and then we go on to number 3 question. Number four question.
I think if there is proper conduct and policies being set up, then the employees should be allowed to invest also, because there will be more money to be circulated in the system. So more investment opportunities can be explored, and thus spurring the growth of the platforms.
Okay. So let's think in terms of what theory. So the argument against is information asymmetry, insider trading. The argument for, one point you're saying is that it brings liquidity into the marketplace. All right. All right. And something similar to that, you could say that they have skin in the game. In other words, invest in our platform because it's so good that we invest in our own platform too. So therefore you can trust me. All right. Trust me, no way. All right. You trust no one when it comes to investment. All right. And it's a bit like that. So there's an argument for, there's an argument against. So think about that. But I think the most curious thing is that with a bank, you give up anonymity where they spend the money. In response, you get the guarantee of return and your money back. But with this platform, you give up that anonymity, but you don't get anything back. It's so funny. I think that's the most curious thing that I have about this platform. And then given that, right, like it's already a dodgy idea for the average investor, they've raised billions of dollars in this format. So I don't fully understand the motivations. And maybe a lot of these are micro investments. Like, you go to the bank, you want to make an investment, then the minimum is 10,000 renminbi or something like that. But at least here, you can just put in 500 ringgit. Sorry, ringgit. I didn't mean renminbi, yuan. Sorry. I'm getting my Nancy. Sorry, I'm getting your country currency mixed up with Malaysia. Okay, so let's get on number 4. Here's the big question for you. All right, now you've been okay. Right now, okay, we're 35 minutes into this tutorial. I want to know, have any of you changed your mind about whether you invest in this platform or not? How many of you have the same thinking about this 40 minutes ago compared to now? The same thinking? That means you haven't changed your mind. Like 40 minutes ago, it could be, oh, I'm never going to touch this. And now you're thinking, I'm never going to touch it. Okay, that means you haven't changed your mind. Or maybe 40 minutes ago, I'm never going to touch it. Now, oh, I'm going to try this. How many of you have changed your mind just out of interest? Or change your mind could be 40 minutes ago, oh, I might invest in this, but now, oh, I'm not going to touch this at all, you know? So has anyone changed their mind? Has anyone, so does that mean you are still thinking the same way, is it? Okay, still thinking, all right. So then there's question 4. Would you invest, how many of you would invest in this platform? Hands up. Just 2 of you. Bok Yong, Eason, Lawan, anyone else? Okay. Well, then make it easier. How many of you would be prepared to do a micro investment? That means less than 1,000 ringgit in this platform. Okay. How many of you would be prepared to put in a significant amount in this platform, say like 10,000 or 20,000 ringgit? Anyone? Zane, still? Okay, all right. Okay, good. All right. So Zane, would you like to share your thinking or your rationale of thinking about this platform?
But again, it's not just blindly just investing in the platform. It also depends on the company in question about who exactly I'm lending to, because it depends if I deem the company to be a sound investment in which I can reliably retain my principal as well as get satisfactory returns that I would personally require. So, but you know, if let's say the company that's in question does not meet my requirement, then you know obviously I wouldn't invest in it. So, yeah.
But you don't know what the in this case you're given a portfolio of notes that you could invest in, right?
Yeah.
Right, and so and the portfolio of notes, as I showed you earlier, it could be a guaranteed property, guaranteed returns. Guaranteed returns, you've got to be joking. I don't think anything is guaranteed. But property backed or investment revolving invoice, which one of these would you be thinking about then? Because you cannot, they will not tell you which company you're investing in. You know what I mean?
Yeah, I'll probably go for the one that is property backed.
Yeah, I hear you. I hear you. All right. Okay. Is there anyone here that will not touch not even 100 ringgit in this platform? Anyone? Ethan, what do you think? Yongchi, what do you think? Anyone else? Any final thoughts? Any final thoughts? Actually, the more I look at this, I'm thinking, yeah, maybe I invest, but I wouldn't put, the experts say no more than 5% should be of your, investable assets should be in P2P, but maybe even less than that is even better, so, and property, you're right. You may choose a less risky investment, whereas invoice financing, revolving credit, business term, these are very risky. And that's why you can see the interest rate, 8 to 18%. Like that's, it's great to have a high interest rate, but you may lose all your money. So got to be very, very careful, right? Okay, this is good. Let's have a Kahoot session so we can help. And the purpose of the Kahoot is just to go over some of the same ideas. And there's only 10 questions. So let's play this thing. So it should be a little bit faster than previous weeks. And we'll go over the same ideas. I hope that I've set the questions up the right way, but let's have the game, play the game, and just to help, use the game to help to just reinforce some of the key ideas, remembering that this is in the area of deposits and lending of the World Economic Forum wheel. And it's Karen is in. Yeah, if you put one of your parts of your name in so we can have fun, I think it's always more interesting then. I'll also be, if your friends are still unsure about joining other tutes, I'll also be taking the tute on Friday at 10 o'clock. And also there's a normal tute at Friday, 11 o'clock. So do encourage your friends that if they're still not sure which tute to go into, there's a makeup one on Friday at 10 o'clock that I'll be hosting again. And I think one of my colleagues will be taken to this afternoon, and he'll be covering the same areas, and my colleague will make it fun as well. Let's, all right, 618-2012, we have 15. Can we have 3 more? Eason, are you in with us? Yes. Bok Yong, are you in with us? Yes. Okay. Bin Shang, yeah. Nancy, are you in here? Nancy, are you with us?
I just couldn't come in.
Okay, can you try again then, Nancy? Okay. 618-2012.
I try.
Okay, that's good. All right.
6.
Okay. Maywanti, thank you. Okay, sure. All right. Okay, and Putri, you with it? Okay, 15. Nancy, are you in Kahoot or not?
Yes, I mean.
You're just in. Excellent. That's wonderful. Okay. Anyone else? Okay, let's start this thing because it's a shorter Kahoot. So let's move this along. Should be able to do it in 6-7 minutes. We'll have some fun. Okay, so our first quiz. Which business is the debtor case study company is involved in? Okay, remember the case study of the defaulting business. Okay, well, we don't know, he may default, but what business was that case study involved in? What business? You got it. It was motor oil. Yes, actually, my first job after I dropped out of high school was working for ExxonMobil in Mildura, Australia. I was only 15 years old. Yeah, I dropped out. I didn't do year 10 and year 11, but that's a story for another time. How can you become professor? Another story for another time. Okay, let's go on. Okay, scoreboard, and I've got my mascot here, so let's get this one going. Wei Ji on top, Yin Tong, Yong Tan, Janita Y, and Sinji. True or false? Funding societies in Malaysia can't share information due to privacy, confidentiality of their SME clients and investors. True or false? True, of course, it's true. That's the big thing that we did talk about. They cannot share information, just like banks cannot share information. But the difference is that banks can guarantee you get your money back. Yongchan Wei Ji is moving up. Y, Janita, Sinji, very good. Let's keep moving on this. 3 out of 10. What is the action taken? Funding societies to tackle the financial troubles. What are they doing? This may be a little bit tricky one, but they're definitely not doing the red. They're definitely not doing the yellow. And they're definitely not doing the green. They're updating their investors. That's all they can do. Like, you know, it's very little that funding society can come in and actually stop the operations of a defaulting business. Well, remember, funding society is just a fintech platform, all right? And in some ways, they have a set of questions. If you want to borrow from them, then a lot of that is automated. It's different from a bank where they may ask a proper financial audit to be done on the business, and they'll get much more information than what funding societies get of their potential debtors. All right, that is no issuers. Whom might the investors target if they know the borrower identity? Whom might the investors target if they know the borrower identity? We did talk about this identity. We want to keep the identity away, all of the above. They could dox the family members, doxing, you know, social media, borrowers, suppliers, borrowers, customers, and then therefore the borrower actually goes into default even faster. Okay. JR's move up. Y's move up. Karen, Jiyong, well done. Answer streak of 4. Excellent, excellent, excellent. You've been doing your homework. True or false? 5 out of 10. If investors know the borrower SME company might liquidate too early and doesn't have sufficient time to recover. Is that true or is that false? Again, it's all about this anonymity thing. It's this anonymity thing that we want to protect the borrowers. Yes, true. Okay. The company may liquidate too early and may not be able to recover. Remember, customers may stop buying from the company if they know who the identity of that company is. Okay. All right. JR down a bit, wage done better. Very, very good. You may both got a result, but one got the answer more faster. What is the advantage of funding society employees to invest in funding society notes? Remember, we talked about this. One side, insider trading. On the other side, well, we want them to invest because it's equivalent to having skin in the game. Yes. Or A and B, skin in the game and ensuring notes are of good quality. Okay. Maybe if you did skin the game, I'd say you're 90% correct there, but maybe A and B is just a little bit more correct. All right. So it's not that you're perfectly incorrect with that answer. Sinji on top, 7 out of 10. What problems might happen when funding society employees invest in funding society notes? All right. Funding society employees, again, I think you know the answer to this one. You know the answer to this one. Please, please, please. I've already mentioned it many, many times. What is the big problem here? You got that key idea. That key idea. You know the answer to this one. Inside Information, yes, of course. Insufficient information, yes. Imbalanced investment. They only invest in the best notes. Therefore, the worst notes are still open for the other public to invest in. Okay. All right. So all of the above. And the next best answer would have been having inside information. So that was a tricky one, that one there. All right. Sue Lin, highest climber. Okay, so right, 8 out of 10, true or false? If funding supplied employees have inside information of good or bad notes, it might create asymmetry in investing experience. Asymmetry, that means imbalance, okay? Imbalance. Imbalance sounds like that's true to me. I would. It's definitely true. 15. Excellent. Yes. Well done. That is super, 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 super amazing. That is great. Okay. So we've got this idea of information asymmetry. I don't want you to feel that this is just a financial term. It's a huge economic term that just gets in the road of efficient business all around the world. That is, you know something that I don't, and then I may use it, you use it for your advantage and not my advantage. Uneven playing field, that's what they call that, which is true about P2P. So low risk, liquidity, interest earned, none of the above. I know which one it is. Definitely the liquidity issues. Okay. All right. Liquidity issues. What does that mean? Okay. You put $100, 100 ringgit in and into a note issue, but the note issue really, for it to be successful, they need to raise, say, 20,000 ringgit. You with me? So therefore, it needs 200 investors at 100 ringgit each to put the money in, and then that normally works. Okay, so we're near the end, and that's the end of the Kahoot session here. And let's just have a look at the scoreboard. JR, well done. Karen and Sinji, very, very well done. We have 10 out of 10, the last one. Based on the opinions of financial experts, how many % should be invested in P2P? We mentioned this one. It's based on the opinion. It's not a rule. It's not a law. And let's see what you've got with this one. And we're finishing up very, very soon. How much % should be invested in P2P? Less than 5%. That was the key idea. But at least all of you got one of these questions right, which means that we are learning something in today's tute. And so finally, we have the platform. And so who ends up on top? We have Y come third. Well done. Nancy, was that Nancy, is it?
No, no.
Not Nancy. Well, who is it? JR. Where's JR? Where are you? Can you wave your hand, please? Do you have JR? Where are you? Hi. Is this an AI person or a real student? Maybe. Okay. And Karen. Well done, Karen. Great effort. Okay, a bit of fun there. So what's the big takeaway? Okay, these are real examples of information asymmetry in financial markets. These are real examples of liquidity in financial markets. These are real examples of how the platform is helping, micro lending, micro investing, but at the same time, it's kind of lopsided compared to what the banks do for you. The bank can guarantee you something, and then you say, I don't care who you lend to. Here, they don't guarantee you something, but at the same time, they still won't tell you who they're lending to. So there's a contrasting there, all right? So information symmetry, you got liquidity, and then you got that contrasting in how the platform is doing the business as a service compared to the traditional banks. Think about those issues when you're discussing this in the future. and if it's part of your business case that you're going to put together. Can I ask all of you to, if you go into the feedback room, and if you want to ask questions, I'll be happy to follow up with a video and answering those questions. Don't forget, if you can go in there, your feedback is appreciated. And I hope you had great fun this morning. That's the end of the tutorial, and we'll make room for the next class. Any final comments or questions? And thanks for joining. I think it's wonderful. Just great to see all of your videos on. I think that's super, super, super. Okay, thank you, Karen, Ruyong, Suyin, Yongchan, Janita, Juyong, Melvin, Zane, Nancy, Pucheri, Bokyong, okay, Jiao, Isan, Binshang. Thank you all, and hope I think next week we might have another tutor looking after your efforts, but keep thinking about your project. It's a very, very important part of the assessment of this unit. Okay. All right. So every time we go through these different areas, that's an area that you may want to think in terms of the business project, a pitch that you need to put together for this unit. Okay. So really appreciate you. And Dr. Shaiban, you're with us for the next shoot. Is that right?
Yes, that's right.
Yeah, we'll hand it over to you. Thank you so much. And I'll just stay on for a minute, Dr. Shaiban, and I'll let the 10 o'clock to 11 o'clock people go.
Thank you, sir.
Okay,
Thank you,
you're
sir.
welcome.
Thank you, sir.
Thank you,
Thank you,
sir.
Thank you,
sir.
sir.
Thank you.
Thank you, sir.
Professor,
Hi.
Professor.
Yes.
I have some question about our midterm exam on Friday. Any tips you can give us?
Any tips for the midterm test on Friday? That's a good question. Okay, I cannot give you any tips because I did not design it. Dr. Mazut is the best person to. The good thing is that the information that is provided, go back and have a look at that very, very clearly. Okay, and that will give you the best thing to go. The only tip I would say is go back and you can go over some of we've got recordings of all the tutorials. And if you go back and have a look at some of the lectures, review some of the tutorial efforts that we did, you can go into the Kahoots that we created and redo some of those Kahoot questions. That could help as well. I hope that helps.
Good question. Kahoot question and per quiz and lecture and tutorial. I typed down.
Sorry, what's your question?
My question is, you say prepare Kahoot question, quiz, and tutorial and lecture.
Yeah, the recorded lectures. So so you go back and review the material that you covered in tutorial. So, and they've been recorded, so you can access them again and listen to those tutorials again, or listen to the Kahoots that we played. That can help, and quickly go over some of the lectures, which are all recorded for you.
Oh, okay. Thank you. Thank you.
Oh, you're most welcome. Most welcome. Don't worry. Just do your best, keep learning. And my advice, and even for those who just joined the tute, and Dr. Shaiban, you'll be looking after this, that is best practice for Friday is to do the reading and have a look at the tutorial problems again, and just to understand the issues that were discussed with each of the tutorial problems. I think that will help you a lot.
I'm very scared.
If you're scared, the best thing to do is play the lecture, play the lecture in the background while doing the washing and different things around the house and all of that. Just listen to the lecture in the background, or listen to a tutorial, or just listen to something in the background to help have a different way of learning, rather than just sitting on a table and just reading all the time. Yeah. Dr. Shaiban, can we hand the tutorial over to you? Do you have your video on, Dr. Shaiban?
Yes, sir. Thank you.
The students love their videos on. There you go.
Yeah, I know.
I just want to, everyone, Dr. Shaiban will be taking this tutorial, and you're in good hands, and really appreciate that you can step in and help out with this. Dr. Shaiban, is there any last questions or concerns that you may have? I think if some of you can put your video on to say hello, Dr. Shaiban, can we have your videos on? Hi, everyone.
Hello, everyone.
Hello.
Hi.
Okay.
Okay.
Isn't it? I think this is great. All right. Put the videos on, and I think it's wonderful. All right. And I'll leave that with, I would just hand you over to Dr. Shaiban for the tutorial, and just continue, just ask lots of questions, participate, have some fun, and leave it with you, Dr. Shaiban. Okay.
Okay, sir. Thank you so much.
Have lots of fun. Bye for now.
Okay, bye-bye.
Bye.
Thank you very much. Bye. Okay, everyone. My name is Mohammed Shiban, and I am replacing Dr. Mirzet for this tutorial. I think I may replace him also for the following weeks. As you know, his health is not really well. I don't know whether you know that or no, but hopefully he will recover soon. So actually, I'm teaching commercial banking and finance. And I don't know, maybe some of you have been in my class before. Fintech is related a little bit to what we are doing in financial institutions. And P2P specifically is a financial intermediary, end of the day, which means there are some depositors who will put the money, and then there will be some type of financial intermediary, call it a bank, call it a mutual fund, call it a broker, whatever, and they will take that money and invest it. So from that perspective, I think this is the way we look at B2B platforms. It's a different settings. It's high-tech issues. We are using all those platforms, but end of the day, when it comes to under what theory they are working and operating, it's financial intermediary. Now, formal financial intermediaries like banks and insurance companies and mutual funds and highly regulated. Here, we are just starting. So I think the way I will run this tutorial, I'll just, I think you have the case. Maybe we discuss the case a little bit. I think there is a Kahoot exercise at the end. I already created, but this is the first time I use it. So what I will do is I will send you the link through the chat room, and I don't know whether you can access it. I can send it from now even. So hopefully you can tell me whether you can access. I'm not an expert in Kahoot. I usually have my exams in what you call module type of quizzes. So let me just send it now. Tell me, please, whether you can access it, okay? Okay, so if you allow me now, let me just share my screen and then maybe we'll just go with the maybe this is the case. I don't know how you run this with Dr. Mirzet, but this is the way we'll go over it. I think you have read the case. What we will do is we will run some discussions, and I want to hear your opinion about it. And then we will go, we continue like this. We can just stop anytime and ask questions and do whatever you like. Did you read the case? Yeah, good. So maybe we just go over the questions. This is a very sad case. Those guys lost, all this money and they have to close up. What do you know about trust economy? Anybody? Now, how come those P2P platforms take money from the investors and then go and invest it? And people just give their money to the P2P without knowing them, just some trust. So the way we receive money in banks, the way we receive money in mutual funds, insurance companies, and all those financial intermediaries, and now when we come to P2P and crowdfunding, it's the same concept. We have in this country something called PIDM. PIDM is this insurance body formed by Bank Negara Malaysia. They now provide around 250,000 ringgits for any depositor. If you have up to 200, this happened after the financial crisis. So when you put your money now in a bank, then there is up to 250,000. And this actually came after the financial crisis, 2008. And this is, a usual practice now across the board in most countries, including Malaysia, you go to Australia, to everywhere. No, P2P and platforms are not covered under this insurance. I have read about all those platforms, UK, US, wherever you go, most of them are not covered under any insurance. It just the investors will take the risk. And this is one of the cases we see. So when they put this money with the, this is a real case, of course, with the platform look for the best. They give them the authority. They are actually delegated monitor to look for what you call delegated monitor, like banks, to look for the best investor and put the money there. So if we have read this, trust economy is actually operating with platform very clearly. I don't know that I have money, if I have money that I will put it there or not. It depends, it's a matter of perspective. So let's go for the first question. Why would the investor want to know the identity of the borrower? Any participation? What do you think, guys? As we said, as we saw in the case, they were looking for, they are asking, they need to know the identity of the borrower. What do you think? Hey, you're so shy. What's going on?
I will try.
Yes, sure.
Okay.
Sarah?
Because because there is existence of information asymmetry between the lender and the borrower. So the investor might want to know more in details about the borrower, because if the borrower is not in a is in a worst case, the investor will jeopardize their returns. So they
Yes.
want to get to know about the borrower.
Yeah, now we come with this new information, which is financial asymmetry. But I will tell you something. When you put your money in the bank, whether this is a commercial bank, a conventional bank, an Islamic bank, a mutual fund, do you know the identity of the borrower, or you just put the money and go?
Don't know, I think.
Yeah, we don't know. Actually, we give them what we call our delegated monitors, those financial intermediaries. If we accept that the platform P2P is another financial intermediary using this, it's a fintech oriented one, but actually this is the norm. The norm is not to know the identity of the borrower. However, when there is problems in banks, at least we know we can go and queue in front of the banks. We do bank run, but here we don't know nothing. Maybe the best way we think we would do is run after the borrower. So yeah, I think this is but actually, if you are trusting the trust economy is operating with three parties, but the borrower and the investor should not know each other. The financial intermediary should be known to the both of them. So actually, but from any other participation, any other comment on this issue? Why would you know that? Why would you like to know that?
Maybe to better understand the worst level of the situation.
I think just, yeah, maybe. It's just like this. If I invest, actually, if I have a savings of 50,000 ringgits and I put it in this funding society, and they told me there is a problem and they send me a letter, as they said here, of course, I want to know the borrower. I just want to follow my money. I don't care about now trust economy and all these issues. I mean, if you have money, you want to know who take your money. Maybe you go there and you recapture some of whatever there. Yeah. So actually, there is no legal and logic behind knowing the borrower, but you can say if you have a note from one of those from this funding society, from this platform, and there is a problem. In normal case, you may not know that. You may not be interested. But if there is a problem, of course, you want to know that. I think this is maybe you would think that if you know the borrower, you could recover some of your investment. So this is any other contribution? Any other contribution? Okay, let's go to question number 2. I mean the second part, which is, do you agree with the funding society action of not revealing the identity of the borrower? Would you agree with them? Because they asked them, they told them to, the Age, which is at least the press, the financial press, was asking them to give some information about them. They say, sorry, we cannot give this information. What do you think? What if you are running this platform? Would you stand same position? And if you are the Age or any investor, would you find some logic in that?
Can I try?
Yes, sure.
I think no, because I think that funding society's action of not revealing the identity of the borrower is not a good decision. because it may lessen the confidence for investors to invest a large amount of money if they have no idea who the borrower is.
So you think the platform should reveal this information?
Yeah. Because if they reveal the borrower's identity, I think it can boost the investors' confidence, and it's easier to monitor the borrower's credit information.
Do you think? Yeah, but in this situation, while as I told you, in financial intermediary, if you are in a bank and there is a bank run, say the bank has liquidity problem, and there is a bank run and you are going to get your money. Of course, the money is not there. It's with so many lenders. Would you think the bank will reveal the information about the borrowers?
True, no.
Yeah, mutual fund will also do the same. They will not reveal it. But yeah, I think I mean I respect what you say, that it may encourage the the investors to deal with the situation. Maybe they give them some comfort, but it's not. I don't know. Let's listen to some other views. Any other views? We are 24 guys here, guys. We are, yeah, we are 20. Yeah.
I agree with their actions of not revealing, because mainly they borrow to SME small companies. So revealing their identity won't really give out too much information about their credibility and probability of repayment. And plus, they actually go work with CTOs and come up with a score first before they let the investors invest. So that is the main information that helps investors to decide, not their identity. Plus, if they reveal the identity, the small companies might be disturbed by the media, which may affect their daily operation business.
Yeah, you're right. I agree. Yeah, thank you. Anybody else? Anybody else want to participate?
I also agree with the Justin, because I think the founding society with the borrower has entered into the contract that it must protect the borrower's privacy, and it shouldn't to be revealed. And also, if they reveal the identity of borrower, it might destroy the company's reputation if they are really facing default. That's my idea.
I think it's a good idea. Remember, the situation when they we understand this, you know, the legal issue of it, but if you reveal the information there, in this situation, this is a liquidation. This is a company, this is a borrower who is under strong and who is under actually financial distress, which means any disturbance now, any disturbance, you have, you have invoices in the market, you have counter receivables in the market, you have, all those debitors in the market, and you have so many things going on. You just disturb it. You just disturb the whole thing. And you, sometimes the borrower may take an action, may take a legal action. They may go to the court and stop operations. Sometimes when we start to go under financial distress and not be able to pay, it doesn't mean it's a permanent situation. It can be recovered. It just maybe you are delaying some installments or delaying some payments. But if you just say, if you reveal the case and you find all these people queuing up in front of your factories or, company or whatever, just imagine all these disturbance. And if they go and take, a legal action, it's even a problem. And if they go to personal issues, like they go and harass you, harass your family, starting to call, especially if this, then it's just too much disturbance. remember, we shouldn't give we shouldn't reveal the identity of the borrower in the normal cases. What if this situation actually, if the company is, if the borrower is under actually financial distress? It will just be, now, regardless of what Litan just mentioned now about the legal issue of the protection of the borrower's identity, but even without that, legal perspective, I think it's there is too much problem if you reveal the identity. Let's go to, I think, any other participation before I move from number 1 to 2? Okay, that means a green light. Let's go to number 2. With disclosing further information, jeopardize the recovery effort. Because I think the Edge asked the platform to reveal more and more information, and they say, okay, we already revealed enough information. We are not going to reveal more. Why you think they did that? If we agree in the principle that the identity should not be of the borrower revealed based on legal restrictions, or because of other considerations like what we have mentioned. So would you agree of revealing more information? It doesn't have to reveal. Yeah, go ahead.
I don't agree to reveal more information because I think it will affect their financing source in recovery, because it might reveal its weakness and being taken advantage of others for personal gain.
Yeah, I agree with that. But I think the question here is saying it's not about revealing the identity of the borrower, but they are talking about giving more information, revealing more information about the situation, where the platform say, no, I cannot reveal anymore. It just, so the question is, yeah, I agree with you. But actually, the platform has something in their minds, and they think if they reveal more information, then in this case, more and more information, that will lead eventually to know the borrower. And if that happens, it's not good a thing to do in this situation. Yeah, any other contribution in this issue?
So may I try?
Yeah, go ahead.
So as the firm becomes more liquidated, I think if the platform is trying to recover the interest of its lender, so if the platform is going to disclose any further information, the information is publicly published, right? Then everyone will know. So as a firm, right, they have many stakeholders. So like account payables, other lenders. So every stakeholder, include the equity holders, will try to recover their interest because they have limited financial resources. So everyone will trying to recover their efforts. So I think this will affect the platform lenders.
Exactly. Yeah. Yeah, I agree with you. Yeah, it will just bring more harm than good. Any other contribution? I think we had more there. Let's go to number 3. Many of it's this is the platform. Many of the platform employees actually are investing in this distressed borrower. Do you agree with allowing funding society employees to invest in funding society's notes? Would there be any conflict of interest? Are there any advantages? So when we look at this issue, we looked at it from two perspectives. One of them, is it good? On the other thing, which means, is there any advantages for that? And the other thing, is it bad or not good? Or is there any disadvantages of that? So let's start, if we agree on that, which is the first one, is there any advantages of that?
Maybe I can go.
Yeah, go ahead.
I think it's good because it gives the funding society employees skin in the game. Therefore, they are more incentivized to make good loans also. But then it also depends on the rest of the credit structure in place. So like we want to see if, let's say in the event of a default, does the funding society employees get first lien on the repayments? And then are the employees automatically investing in everything, or are they just investing in selected investments, which means with their insider information, they can actually just pick the best one and then claim they are investing in their funding society loans itself? And then also how much are they investing in? Because if it's too little, it's immaterial and therefore they don't have incentives. But if it's too much, then they are also actually crowding out other investors. So these are some of the other questions to raise besides this.
So from your perspective, do you see the goods better than the bads, or was it a good thing to have employees investing in those platforms, the platforms they are working in?
It's a good thing, but we need to have other information in place as well.
Okay, good. Any other, we need more contributions here because it's two argument.
Sir, may I answer?
Yeah, go ahead.
Okay, so I do not agree with allowing the employee to invest because employee have an unfair advantage in comparison with other investor due to direct access on the company operations and situation, where employees would have internal insight about the company itself, where they could retract their investment instantly when they know the company goes wrong.
So you are against, you are not with, seeing the employees investing on the platform they are working for, because there will be, simply what I understand from you, that there will be some type of financial symmetry and also conflict of interest. Is that what you say?
Yes.
Okay. Anyone else?
Sir, can I add on to that?
Yeah, please go ahead.
I think that
First of all, which position you are taking?
the one that I don't agree.
Against, okay.
Yeah, I'm just adding on. So because I think that it may cause unethical actions because employees might be able to control the platform and act in their own best interest since they have more inside information.
Yeah, okay. So it's a conflict of interest and financial symmetry. But do you think if employees actually know more information and investing in some of those, in the platform, then in this case, when there is those application of the borrowers and they are going to put their money, do you think they will be more careful in choosing the right borrower? Would that will give them some motive to choose the right borrower and to follow those borrowers when they are, to be more, because they have now self-interest in the issue and in the investment. So first of all, they will select the best borrowers. And the second of all, they will, try to be careful about the investment because it's their money there and it's also their job. Would that make sense to you?
Yes, I agree, because it will be better aligned yeah, personal interest with the investors' interest.
Yeah. So maybe yeah. So we want to look at it from different perspective, but I like your insights actually. It's more than what I have here. Any other contributions?
I think I can add up, sir, for number 3.
Yes, Waljan.
So I think if allowing the funding society employees to invest, actually I prefer more to the positive impact, because I think that in times where there is a default, the employee will have belonging sense too, and they will try to their best effort in recovering their investment to the company. And then the negative effect is the investor may prioritize their return to their investment first before they recover money for other investor. So there is a harmful effect as well.
Yeah, but when you are saying covering the money for themselves before the other investors, I think what happens in the platform is not a bank run. The bank run means not first come first served or first come first paid. I think what happened in the platforms, if they are going to liquidate, they will liquidate. They will have a pool, and then they will distribute it. It's not like a bank run. In bank run, whoever comes first will get his money first, and then the next person maybe in the line or the queue will get zero. You can get 100%, and then behind you the money is over. I will get zero. In the platforms like mutual funds, I think they will liquidate all the assets, have a pool, and then distribute it proportionally among the investors. So I don't know that the second the second argument of yours is very valid. It's not a bank run. This is what I want to say. Bank run is if the employees have have some advantage, they can get the money first. No, they cannot get the money first because there will be a pool. But maybe there will be a financial symmetry. They will take advantage and invest maybe in the best with the best borrowers, and leave the rest bad borrowers maybe to the investors who doesn't have this information. And financial symmetry in an investment is no good anyways. It's no good. Yeah. Any other contribution on this issue? Okay, do you know about Goldman Sachs? Goldman Sachs, this is the biggest broker in the world. It was in the US and during the financial crisis. This Goldman Sachs was actually is not a P2P, it's not a platform. They were fined, I think, by the US Congress around $10 billion. And they were filed this because they were fined all this money because actually during the financial crisis, they were advising their customers to invest in some investments that they don't invest in, which means Goldman Sachs is a broker and also an investment bank. So they were asking the clients to invest in some, they give them some type of securities and investment opportunities. They advise them to take it, but they don't take it themselves and invest. And that is actually, I think confirm what we are saying here with the disadvantage. Some of the employees of the platform, this is a small size. When we talk about Goldman Sachs, it's a different issue. They are huge, but I mean, the concept is still the same. They were investing for these employees. There is a possibility that they will just invest with the best borrowers, leaving the bad borrowers or risky borrowers to go to the other investors. So to recap this issue, the argument for, in my opinion, is if the employees knows they have the if they have self-interest, they can cover even during the they can recover much of the money sooner because they have self-interest during liquidation. Also, they when they invest, they will be sure that they invest on good quality notes. Now, the disadvantage, as I said, there is a financial symmetry, and actually, sometimes you don't know how much is the employees are investing actually in which borrowers. So it's the financial actually a symmetry issue. Maybe we go to the last question. I think, would you invest in B2B? Why and why not? I think we want to expand in this issue because how long those P2P have been here, have been in existence. And actually, what is the total assets? What is the market cap? There is no market cap, but what is the total assets comparing to banks? And one of the questions I would ask myself and ask also and share with you, is it cheaper or more expensive for me as a borrower to take from a bank or to take from a platform? And as an investor also, would it be cheaper for me? Would it be more rewarding to invest in B2B in those platforms, or put my money with a broker or in a bank, fixed deposits, or in any other investment opportunity? When we are talking about financial securities, anyway, we can invest in any financial security. We can put, as I told you, a deposit. We can put it in a fund. We can put it, or we can put it in a platform. It depends on, now, financial institutions have liquidity advantages and have credit risk, price risk advantages. And I think the money is protected if you are going with the bank. Having said that, if you have now 5,000 ringgits, which is your say your savings, would you do that? Actually, I mean, if we are now offered to invest in one of those platforms, would you do it? Any contribution? As an actual case, would you invest in B2B if you have a money right now?
I think I would invest to diversify my investment portfolio.
Okay, nice.
I
How
think
much?
I would invest some of it in a very low risk companies to earn higher returns than putting it in a fixed deposits, but not too much of it because there's still risk of default.
So if you have a saving of 10,000 ringgits, how much you would put in this platform?
Maybe 1,000.
So you are talking about 10%.
Yeah.
Yeah. Anybody else? And just Jaya, yeah, you said you will put this 10%, and the same reason for diversification or for return? Why you would do that? To diversify or to get more return? Are you with me? Jayashin? Jaya Wong? Oh, I think.
Oh, sorry, I didn't know you were coming from India.
Yeah. So why will you do that? You said you will invest around 10%. Why would you do that?
Because I think the return would be higher than putting the money in fixed deposit. So it's mainly for the return.
Or return. Diversification?
Maybe not really, because there's still quite a high risk of default for this for P2P lending.
Yeah. It's just, diversification, I don't know about it, because diversification can be done by huge institutions and what you call institutional investors, where they can, to do diversification is a very sophisticated issue. You have to provide all those modelings. You have to have these huge funds. Even small banks cannot do, really real diversification, but maybe to avoid risk. Because when we say about diversification, even when you talk about small bank or small mutual fund, and when we say small mutual fund or small bank, we are talking about, say, 10, 20, in this country, you are talking about 10 billion, 20 billion ringgit. If you talk about Maybank has around almost 1 trillion of total assets. You talk about public bank, you are talking about 700, 800 billion dollars, billion ringgits. And you can, so when we talk about very small bank or platforms, you are talking about, say, 20 billion, 10 billion. Those banks also, when they do, they sometimes don't diversify. Why they don't diversify? They say, okay, I'm going to specialize in housing, and I want to increase my expertise and my pricing for my loans and do all these things with this group. It's okay, it's good. They have benefit of that, but they don't diversify. So diversification actually happened for those huge, institutional investors, where they can really, because it's a very sophisticated modeling. It's a very sophisticated modeling. You can bring, all those what we call, you have 916 stocks in Kuala Lumpur Stock Exchange. You have foreign currencies. You have investment inside, outside the country. You have all those type of currencies. You have, all those sukuk, all those issues. You can then you can diversify. And when you do that, it's a very, only robots can provide actually those. When we talk about diversification, just now, I think in our case, if I were me and you, if we have around 10,000, 20,000 ringgit and we want to invest, we are not really talking about diversification. Maybe you are talking about avoiding risk. And because diversification means you lose from some and you gain from something else. End of the day, you are getting the same return. But avoiding risk means you don't want to put, your eggs all in one place. So you put it in this platform, they make the losses, you lose all your money. You still lose some money, but in diversification, you don't lose. In diversification, you still having the same, you make the same return, the target return. Any other diversification? Any other contribution? Any other contributions, my friends?
I have
Sir?
oh, never mind.
Okay. So I wouldn't invest in it because I'm generally very risk averse, and this investment is very unsecured, and there is no insurance covered for your piece of investment if anything goes wrong. So in my situation, I wouldn't invest in it.
Okay. So Yi is saying she's not going to invest. Anybody else? Anybody else? contribution in this issue? Would you invest or would you not you invest? Wouldn't you invest? And why?
If I may contribute?
Yes,
so,
please go ahead.
Peer-to-peer lending in a more traditional investing outlook is kind of like high yield and risky bonds, but they are more focused on the short term in maturity for peer-to-peer lending. So therefore, it's an investment with 100% downside, but limited upside in gains, although for peer-to-peer lending is quite high because the interest rate is quite high. Therefore, an investor only needs to be concerned about the borrower's ability to service the loan, which is which is more on the short-term nature instead of a future viability of the firm, because you're not really concerned too long into the future when your loans is expired. In fact, actually for peer-to-peer lending, I would say an investor would not want the firm to do like super well. They want it to do like in the Goldilocks zone of just well enough, because if they do poorly, it's quite obvious they are going to default on their loan. But if they do too well, that means next time they're going to grow too big, which means peer-to-peer lending will not be really, how do you say? It will not be a really suitable lending platform for them, because they already proved their credit worthiness, right? So therefore, they will actually go to banks, or they'll go to a bunch of investors happy for lower yields with less risk. So therefore, you actually don't want it to do too well. And actually, regarding just now, one of the participants comment that there's no insurance. Actually, for European peer-to-peer lending scenes, there's actually this thing called buybacks, which means that the platform itself will buy back the loans if the loans go on default. So therefore, in that kind of case, it's actually transferring the credit risk from the borrower to the lending firm itself. So in this context, they'll transfer from the borrower to funding society itself, the credit worthiness of funding society. So in fact, you're actually just making a bet on the credit score of either the firm or the borrower. Yeah, that's my.
Oh, yeah, thanks. It's very detailed, and thank you very much. But you mentioned something about the European P2P, and you said they are insured. I remember only there is Zuba insured, which is the UK one. But the other one are not covered under any type of what you call insurance, deposit insurance scheme, like banks.
It's not exactly called an insurance. It's more like the platform itself guarantee the loan. So it's like if the borrower default, then the platform itself, so in this case, funding society will, repay back the loan, will buy back the loan, the bad loan. Yeah. So it's not exactly insurance, if you can say that.
Because I mean, the general perception is that P2Ps in general is operating with this trust economy. I mean, look, when we invest in anywhere, even when we invest in banks, we have this assumption that the government is actually guaranteeing banks whatever. They're guaranteeing banks from the perspective of protecting the system, which is the systematic risk. Other than that, there is nothing about it. I mean, and the bank collapse. We have seen a lot of banks collapses. Maybe in Malaysia, Bank Negara is very careful to protect the system, and they are very sensitive about it. B2B is just it's just another financial intermediary, this growing, and they are not actually. I mean, if you invest, then you have to accept it's a PLS, it's a profit and loss, type of implied agreement. So if they make profit, that's fine. If you make losses, then that's fine. This is the norm of investing. I think there is a perception that B2B should always be profitable. One thing I know about B2B, they are small and they are growing. And because they are small companies and they are growing and they are making a lot of profits. This is the norm with the small companies. Big companies, they already matured, and then the growth is a little bit. But when you have those small startups, actually they make a lot of profits and they can grow very fast. And if you are lucky to go with the right platform, then there will be a much return. Yeah, it's not like what Jaya said before. It's not a fixed deposit where they will give you 1 1.5 or 1% or maybe less than that return, they give you more. But this is one of the reasons. Actually, there is return, so I agree with you. Any other contribution? So if I share with you my ideas, at least in this issue, this is what I did. I said, overall, I think it's high risk, but there is the diversification benefits because it's uncorrelated with the ship performance, but assuming that you have a big portfolio, which I still, not happy with this diversification issue. I think this is the two more important issues. This is which is they are more how can I say you can say they are these two issues, which is small and high growth and high return. I think we are done now. Unless, is there any other contribution, please, in this issue? Actually, your contributions are very, very, very good and very nice. Now, I want to ask you: did you manage to? I sent you the Kahoot link. Did you click it? Can you access the questions? I sent it to the chat room. Can you access it? Did you see it? Anybody? Anyone?
We don't have the code.
The code. So from the link you cannot access, right?
Sorry, I think the link is to the questions, like we're viewing it as a creator of the Quit Smart player.
Oh, see, this is the problem. I sent Prof. Neil. So this is not the right way to do it. I do it in quizzes. So do they mark this one? Is it marked later on? Do you get grades for it? Or just for the exercise?
I think just for exercise. To gain better understanding.
To get some understanding. Then if it is for the understanding, instead of going to this, I will just go to the questions. And maybe we go over it and see.
I think we need to do it for our tutorial participation. So we need to leave our names there.
So there is a participation marks for this, right?
Yeah. So we actually need to do the quiz.
Actually, there is no time to, you know what? I will just talk to Mirzet and to Prof. Neil also to give the group, the whole group. I have 27 students. I think we'll just give you the grade. And then for the next class, at least I will be able to just give me a minute.
So I think you can click on the link.
Yeah,
And
I was trying to get the document itself, but this is the document I have, because the link has also the solution. I mean, for question number one, I can send this to you later on. Which business that the this borrower belongs to? As we know, it's the Motor Oil. For number two, I mean, this is a very straightforward questions. Number two is funding society Malaysia cannot leave any information. And this is because of the due to privacy and confidentiality, and I think we have discussed this. So for number three, what is the action? If you disagree with any of those answers, please let me know. If we agree, we'll just go over it. I already highlighted in red. What is the action taken funding society to tackle their financial trouble? They were just sending letters, actually, what they did. They sent the first letter and then they sent the second letter, but other than that, they didn't do anything. And they think they wanted to give some time for the platform to see whether they can get their invoices, collect their account receivables, and do all these things. They were planning to do some type of legal action later on. They have a team or whatever. But actually, until now, all they do is communicating. Everybody agrees? And note.
Sir, sorry for the interruption. So we don't need to do the Kahoot, right? This is basically the question.
Yeah, this is the questions.
Oh, okay, so thank you.
Yeah, this is the question because we didn't do it in the right way, according to the Kahoot. What we'll do is I will just try to talk to Mirzet and Neil to give the, and then next class I will just use the quiz in the right way. Yeah, so in note 2, they have the following questions. Who might the investors target if they know the borrower's identity? I mean, this is if they reveal the information. There is consent that they will attack, they will harass the families or the customers and the suppliers. So all of those problems and disturbance can be happening from the investors if they know the identity. Now, for number 3, if the investors know the borrower company, they might liquidate the SME company too fast. Can I say why they may liquidate the SME company? How can they do that? They say the answer is true. They can take a legal action, or they can just, close the place. But actually, if it is a legal liquidation, it will be a legal action. We have here question also. What is the advantages of funding societies? I think we have discussed it. And we said having skin in the game, which means they already know the business. And therefore, they will choose the right borrowers. And they will ensure notes are good quality. So they have motive actually to follow. And I think we have discussed this. The last one was problems might happen with funding society employees if they invest. Actually, financial asymmetry, imbalance investing, where only the best notes can be invested, and insufficient information on investment details. So actually, it's all of this. And funding society employees have inside information of good and bad notes. This might create asymmetric information, and this is true. Actually, this is what we have discussed in the information of the case. They just put it in a way it becomes a questions in this Kahoot. I'm really sorry today because I will try to figure out how to use it next time. So you have the code and do all these things. I think time is over today. And if I'm continuing with you, I'll be seeing you next week. Any questions or comments or anything? I run my tutorials differently from this tutorial, completely differently. But this is actually fun. I like the way you participate. Most of you outspoken, and I like this. You give some energy. I don't want to kill this energy. I want just to increase it. So we didn't have the cohort today, but we will have it next class, and hopefully we will discuss more important things. Thank you.
Thank you, sir.
Okay, thank you. Good day.
Thank you, sir. Happy day.
Thank you, sir. Bye.
Thank you. Bye-bye.
Yes, sir.
Thank you.
Hi, Shaiban, all finished? All good?
Yeah, I finished, but I didn't manage with this Kahoot thing.
That's all right. No, that's...
So yeah, so I created the link. I created the link as you see here. And I think I sent you an email this morning, or not email, just a text. So when I click it, how the students were talking about the code. They wanted a code. So I can share with
so
you.
you couldn't do that. Oh, okay.
Yeah, how is the code is created? Because I have class later on.
You'll have to, yeah, that's...
So see, I will show you. I will share with you now.
Okay.
So this is what I did. I think this is the questions which